Our topside price objective met faster than anticipated, and it appears as though the bulls are not done. The kind of upside pressure found today is merely a reaction based on the immediate sell-off that was faced on Tuesday. We have plenty to talk about, so let's dive in. Welcome back to the channel on this thunderous Thursday. This is ARCa, and let's dive into ticker symbol FNGR. Let's kill him. What is up, you guys, and thank you so much for stopping by once again. Let's go ahead and pull up the charts here for ticker symbol FNGR. As you can see, price action reached a really impressive $6.49 all today. Very, very, very impressive price action, team. So the reason why I am saying that it is price objective that we met a little earlier than not is actually because of this right here. So this is the ascending triangle we spoke of yesterday, right? And the ascending triangle, by taking this trend line here, right, from the top side of the triangle to the bottom side and applying it to the breakout zone, which, you know, is right up here, actually led to a target of $6.51. So today we fulfilled that by reaching 649, right? So very impressive, right? Not only that, it's just that you can see here very clearly on the candle that we rode to the upside with. We closed at the initial target, right? That was at around 585. And then, price action followed to do its thing afterward, right? We closed the day, let's see, post-market closed at 579. So a very impressive close nonetheless, right? And a very important detail to take out of this is that we closed with the, several hourly candles here with the EMA 21 and the EMA 55 located below us. And you can see as well that the moving averages are with an upside pivot, right? So this is very important because as soon as that exponential moving average 21 period, a yellow line, crosses above the EMA 55 orange line, that would be a silver cross, right? On this is starting on the hourly time frame, so that's already looking very good. The fact that we have capitulated, failed this entire set of moving averages here, and then reacquiring them. Wow, sorry about that, team. It's a hair in the tongue there. It's incredibly important, right? So now, speaking of other time frame moving averages that we've acquired or we've gained upside of are actually this is the hourly SMA 50. So you can see that we're actually using it as a support right? The SMA 10 is currently being used as that support as well. So this is looking pretty good. The hourly time frame now has every moving average below us, right? So that's all. It's definitely all right. So now if we can actually look at the 4-hour time frame, you know that this is a very, very critical time frame for me to consider an upside continuation. And as you can see here, the 4-hour time frame has in fact reacquired the inside or the top side of the SMA 200, the SMA 10, the SMA 50, most importantly, and both of the EMA 21 and EMA 55, right, team? So even in the 4-hour time frame, we have that upside. And I do think that we have it in the upside in the 6-hour too. And yes, we do. Check it out. SMA 50 upside of the price action is upside of the SMA 50 here. It's landing at a 579. The SMA 50 is at 572. Okay, so this means that we have support back from the EMA 21 at 563 to 573 so far. So this is looking very, very powerful. Oh, right. If just in case you are wondering why I have this here, is because I've announced one more class, right? So please go ahead and get in touch with me at arcmasterscourse@gmail.com, as I am offering one more master's course. Yeah, and it's set to start in a few weeks, right? So please go ahead and get in touch with me. I've only put together 30 seats for this, and I've already gotten around 12 or 13 people over the last 4 days, right? So please make sure to gather yourselves and enroll, right? So send me an email here and I'll send you all the details. Thank you so much for that, team. Let's go ahead and move on to the next chart and see what we have, right? So now with the price action today, it's very important that we notice the larger or macro time frames. Now, the reason why is because this macro time frame, this bi-monthly candle is in the process of actually validating itself or breaking out of the Gaussian band, right? So please notice here that, I mean, well, first of all, you know that we closed at 579, right? So that's actually right, I mean, ever so slightly to the upside, which is still beyond the threshold of this, there we go. And the support here is 563. Very nice, right? So now we can see that we have yet again 563 kind of rhyming in there. And that's actually with the EMA 21 on a 6-hour time frame, right? So this is it's pretty nice that we can see the similar support here in very distinct time frames. All right, team. So now this is the 12-hour time frame, and just to show you how this has played out so far, right? So we got that huge red candle here that had the size of literally nothing ever repeated ever since, you know, the run that we had to 980 back here in September 2022, right? So it's very interesting to see how the bulls react to this type of capitulation, right? So, I mean, the thing is that what goes up fast must come down fast, and what goes down fast must go up fast. It just it kind of works like that, right? It is in essence kind of it's just a psychological reaction, right? So now, yeah, we have a little bit of resistance here based on the take profit from our previous formation being the ascending broadening wedge located at $5.87. We're currently sitting at 579, and we've already knocked at that door very, very clearly. Right, team? So yeah, this is looking pretty powerful, and actually even in the 12-hour time frame, it does look like we still have some ascending volume, right? So yeah, this is looking okay. Definitely not something to hate here. So let's go ahead and touch down on the next chart. So this is the daily volatility versus momentum back test. This is where I spoke to you yesterday saying that as long as we remain within the expansion zone and the critical contraction zone, I'm talking about volatility, the signal is still on, right? So we're gonna complete this signal here until price action reaches a new high or volatility reaches either of the extreme contraction or expansion zones, right, team? So to kind of put it into context here, anytime that volatility has contracted into a critical level, which is within the 15th percentile, and started an expansion phase that would actually consist of both the moving average and the volatility component, that paired with an upside pivot of stochastic momentum, I have taken note of every iteration where that has happened, right? So if, for example, here, I took a note of the duration of the iteration, right? This is the upside thrust and the amount of times that volatility versus momentum have guessed the upside correctly versus incorrectly, right? So these are all of the samples taken in the daily time frame throughout the entire trading history of the FNGR asset. And here are the results, right? So what you're looking at here is the data set based on all of the samples gathered here. So we have 20 total iterations on a daily, which come out to 17 guessed correctly to the upside, which gives us an average upside accuracy of 85% with a mean, or AKA average upside thrust, of 33.40%. And I have calculated the standard distribution here, right? So this is actually the standard deviation here, and this would be the bell curve, right? So 68% of your average performers, that is, right? That's located at 35.12%, and these are all upside targets based on the firing of the signal, which, by the way, the signal was fired. Let's see if the signal was actually fired back here at $5 and looks like 18 cents on September 28th, right? So far, like I said, as long as we don't touch either of the critical zones, this signal is still fired, right? So yeah, and you're wondering, well, ARCa, you said, you know, upside pivot on the stochastic momentum when we face this. That's true, team, but it's okay as long as we fulfill the upside based on volatility not reaching either contraction or expansion. We're still on. And another thing you can do too is kind of massage the information a little bit, right? Let's see if we can get a closer look back. Let's change the D percent from the K and D percentages, which is the exponential 3 period, or the 3-day exponential moving average, which is represented by the yellow line here. And let's go ahead and change this to, and also the smoothing factor. We'll change it to a factor of 1, right? So this is going to be the D percent at a 1-day look back with a smoothing factor of 1. Let's see what it does. And there you go. We're getting the early reads here for a continuation to the upside on stochastic momentum, right, team? Let's go ahead and put that back to the way it was, because I do like to see a very delayed reaction within the stochastic momentum so that we don't react faster than we should, right, team? So, yeah, now the upper bound of the first standard deviation right up here is landing at about 68.52% with a lower bound at 1.72. Now, what's happening here is that we're actually on the way to completing yet again the mean, followed by the standard deviation of 35.12, right? So those targets are located not too far from where we actually went to today. So the mean, 33.40%, is located at 701. All right, we came up to 649 here, very close to it, and it's still suggesting an upside continuation. In fact, looks like volatility is starting to curl yet again, and expansion is going to begin here. It is more likely than not that expansion may start here, okay, team? So next thing that we want to focus on here, aside from the statistics, is that we are still playing, just like we talked about, right? We're playing the ABCD strategy, just like we said, right? So we found the floor here based on that immediate sell-off, and now we're moving on our way back up, right? So this bottom side here, this is what's sort of suggesting the potential or a higher probability of actually reaching the top side of the standard deviation, or the upper bound of the first standard deviation being 68.52% to the upside, aka $8.84, or your geometrical 2.618 golden mean at $8.82. So there is a lot of rhyming there. So yeah, we have the top side of the channel here landing at approximately 860, right? So between 860 and 884, that's essentially the range of resistance here, based on formation analysis, right? Based on geometric targets and statistical targets, right? So yeah, that's it's looking mighty powerful. And I guess I can speculate a little bit here, right? Because it gets some people a little riled up when I do this. So because you went ahead and tried to put a hit piece against me, and because I have other influencers also talking their silly shit, well, pardon me with the French there, we're going to go ahead and tease them a little bit, right? So let's just say that price action ended up breaking outside of the C, right? So if we get price action breaking out of that upper bound of the first standard deviation of 68.52%, or 882 at the 2.618, that can lead price action to a pretty high target. Okay, first of all, the way you do that is you take a trend line, right, from the top side of the formation to the very bottom side of the formation, and then you apply it to that supposed area of breakout, and this would give you a target of what? Let's see. Well, look at that. It says right there 1627, and for some reason you have the 4.618 again at 1626. What do you know? Well, I'm not saying that we're going there. I am saying that this is how you play the formation in the event to where it breaks out from the top side, okay? Just know that this is a bearish formation though, okay? And inversely, it would actually play the same way, right? So let's just say in the event to where we did reject at $8.80 and then it came back to 420 or 465, then the breakdown point from this area here would actually be a trip back down to around $2.41, right? So just to make sure that I can kind of cover both bases there for you. But there it is, right? So just, I had a feeling here that this target itself would land at a 618 golden mean. So just to put it out there like that. So if you don't know me, if you don't know how I trade, or don't have the decency to start looking or understanding or studying my analysis here, then go ahead and keep your silly mouth closed before I can shut it for you, right? So this is it's just the way I trade. I'm quantitative, I'm systematic, I do not care about direction. I will call the downside on this any day. I don't care. And this is why, right? This is why people end up saying, you know what? I spoke about this in the live today. I was telling them that I'm going to go ahead and probably put together the posts to where I'm being accused of being the naked short seller, right? Just about 2 weeks ago, I was the naked short seller, and I owned Lynn Partners, right? I was the prime broker here, right? And now today I'm tier 1 pumper. Right, so it's really interesting how that's a huge indecision candle, right? You can't choose which one I am. Well, that's because I am both. I am absolutely a bear and a bull. I don't trade just the upside. I'm an ambidextrous trader. I'm a short seller and a long buyer, right? So please know who you're talking about here, right? So if you don't know me, if you don't have the decency to find out, then keep that silly mouth closed, right? So because this is how it's done here, team. Speaking of algorithm, go ahead and get in touch with us at arqindicators@gmail.com to get yourselves the new indicator packages that we released, right? The new algos, right? With the buy and sell strategies, with the actually this was one of them right over here, right? That we were observing. Where was it, right? I think it's actually this one right here, the one that has trend line, right? We have built the trend line indicator to have, what is it? I think it was the MACD within it, right? Let's pull up the bi-weekly time frame. Here it is. There, or was it the weekly? Here we go. There it is. There it is. Let's get the Gaussian band out of the way so that you can see it clearly. All right, so yeah, this is one of the algorithms here that we have released, right? So this is the MACD paired inside of the price action itself, right? So in case you want to see what the original MACD looks like, this is the traditional MACD, right? So whenever you are up here above the mean band, then you're actually in the green, and please notice how you're in the green here, right? When you're below that mean band and you have the crossover strategy, that starts getting purple and it starts getting red, right? When we're in the red area. So in the event to where you don't feel like having an extra indicator down there, you can just load up trend line here and have that momentum based right built into your price action, right? And also notice that it has given you the formation too, right? So the pivot points is also something that would give to you, right? So please notice here, you got the pivot point here, pivot high, saying that this is likely the area where it's going to start turning around 1 week before it happened. What do you know, right? Here again, 1 week before it happened, bam. And again right here, 1 week before it happened. Very, very curious, right? Yeah, so these are the indicators that we have. These are the indicators and the algorithms that we have put together here. So please make sure to get in touch with us and get yourself subscription package from these two, team. All right, so let me go ahead and continue on the analysis here and touch down on the RSI because it is looking pretty nice right now. Okay, so 30-minute time frame here is suggesting a continuation to the upside, but I would have to point out that we definitely have that the SMA 14 upside of us, right? So if we do have that SMA 14 upside and entering the gravitational zone here of the bull strength percentile, we may have a little bit of a short-term time frame risk of a slight pullback here, but that's entirely okay. You know how that song goes. We just get that pullback and continue onwards and upwards. And in fact, 5-minute, 10-minute, and 15-minute time frames are suggesting continuation to the upside, which now make me believe that the SMA 14 may get succeeded here by price action or by the RSI signal represented by the light blue line, right? So please let's go ahead and take a look at the bi-hourly time frame here as you see the RSI signal here with an upside pivot entering the bullish control zone. And not only, we're within the bullish control zone now, but we're entering the gravitational zone of the bull weakness percentile with an upside pivot on that SMA 14 as well, represented by that pink line, right? Looking very good. Now, the 3-hour time frame and let me pull up the 6-hour time frame instead, right? So please notice how they're actually not favoring a pivot towards the upside or to the downside, right? So that's likely because of the immediate short term. We need the immediate short term time frames to decide to make their pivots to the upside or downside in order to start influencing the upper bound time frames, right? So now from this point here, using the 6-hour, sure, let's go ahead and take a look at the 8-hour and the 12-hour. 8-hour, it looks like it's about to face a little bit of a pullback, right? So that's very much in line with what we're talking about here on the 30-minute time frame. Definitely not a guarantee and definitely not something that could happen. Please remember that as the asset continues to gain more and more psychological impairment, it becomes a little hazier for us to see the price action as we go. We can only speculate as we move on, right, team? So yeah, let's go ahead and take a look at this here. The bi-daily time frame, yeah, still waiting here. We got the pivot that we wanted though, right? So we definitely got that, but that's already done. So let's just see what's going to be coming up next. Now the 3-day time frame is suggesting a little bit of a pullback here, and I would say that I can't hold it too credible because it is always, remember team, I tell you this all the time, please make sure to mind the position of your RSI signal versus your SMA 14 within your RSI setup. Why? Because in this area here, we're entering the gravitational zone of the bull weakness percentile, which would essentially catapult us to the upside. 5-day time frame, of course, is just going to be a little bit it would be facing just, to the right here, consolidation, because it is waiting for the shorter time frames to decide that, right? So just observe momentum the way I do, right? So you're looking at a cascading event or a domino effect, right? The shorter time frames, depending on how hard that pivot is to the upside or downside, would likely cascade into the next, which would then cascade into the next, and so on, right, team? So that is looking that appears to be the play here. That short-term downside that I'm speaking of could very well be the 6-hour retest of the SMA 50 located right at the bottom side of our range that we already had here between 572 and 582. So particularly speaking about 572, if we're going to put a secondary target to this, we can, right? So let's go ahead and just align that now. I do think that there could be a slight touch back down here at about 566 to the bottom side of this wick here at about 568, just in case we fail the SMA 50, right, team? But yeah, now you know the targets, upside targets, I guess. Obviously we're going to have to come back and break the 649 level in 649 top here that we faced today. That would be the next obvious breakthrough, but I'm talking about the shorter time frame here, right? So now we have another difficulty here. We have yet again the $5.99 or $6 target. As it is a psychological target, we need to get over it and close some smaller time frame candles above it in order for us to continue and validate as a support. Right, team? So let's go ahead and get at least a 4-hour closure upside of $6 here before considering a continuation to the upside. And something tells me that we may actually see that. All right, team. So now you know the targets. Now you know the bottom and upper targets that we're getting at here. Please remember to always manage your risk, because as you can see here, this asset has the potential to just sell off out of nowhere, right? So please make sure to protect yourselves, as no one else cares about you or your positions in the markets. It's just definitely you who cares, all right, team? So I need you to be vigilant. I need you to be sharp, and I need you to be awake for this. Sharp. All right, team? Please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. Never, ever. I need you to do your own due diligence and everything will be cool. But with that said, team, I wish you well. A very, very good night, and I will catch you at the bell mañana. Adios.